silver's leading, and it has been leading now for the last, the ratio's down to 73 from, it was over 90 just month and a half ago. So silver's definitely outperforming, and silver is the fuse to the gold market. You couldn't have $100 silver and gold not go higher than where it is now. And the real danger is that gold is the antithesis, if you will, to fiat money. It's the anti-dollar. It's real, and the fiats are printed by man. They're not real. If you had $5, $10, $25,000 gold, you would have interest rates going much, much higher because confidence would be breaking in the sovereign debt.
Silver recently broke a key resistance level of $30 per ounce, marking the first time in over a decade that it has reached this price point. The significance of this milestone cannot be overstated, particularly considering the historical precedent it sets. The last time silver surpassed $30, it swiftly ascended to nearly $50 per ounce in 2011. While a recent sell-off temporarily brought silver below the $30 threshold, its performance mirrors the vigor of past bull runs. BillHolter, a former stockbroker, notes that silver is currently leading a rally, attributing its heightened volatility to its relatively smaller market size, which renders it more susceptible to manipulation. Holter underscores the historical trend of silver outpacing gold and examines the impact of financialization and short positions on market dynamics. Despite gold's remarkable ascent, reaching record highs above $2,400 an ounce twice this year, silver has surpassed it in percentage terms. From its February low to its recent high, gold recorded a 21.7% increase, while silver surged by 44.6%. This trend is consistent with historical patterns, where silver often outperforms gold during bull markets due to its greater volatility and industrial demand. Holter emphasizes the significance of silver's performance for the broader gold market, suggesting that a substantial rise in silver prices could also propel gold prices. In the first half of the year, gold has undeniably been the star performer, breaking records and capturing widespread attention. However, as we enter the second half 2024, silver appears poised to steal the spotlight. Quietly outperforming gold since February, silver soared to an 11-year high last month. Although it may have some ground to cover to reach its previous all-time high above $49 an ounce, even if it falls short of this milestone in 2024, it could still achieve a new record for year-end closing prices. Holter argues that gold is a hedge against fiat currency, which lacks intrinsic value and relies solely on government mandate. He cautions that a dramatic increase in gold prices could erode confidence in sovereign debt, potentially resulting in higher interest rates and systemic instability. Join us as we delve into BillHolter's insights. To stay updated with our latest uploads, subscribe to our channel and activate notifications. Thank you.
Right. Well, silver is more volatile than gold, and it makes sense because it's a smaller market, and it being a much, much smaller market, it's much easier to manipulate. But going back throughout history, silver moves up and moves down faster than gold does. The problem now, because everything is financialized, and you've got these short positions that are basically being margin called. Yeah, silver's leading, and it has been leading now for the last, the ratio's down to 73 from, it was over 90 just, month and a half ago. So silver's definitely outperforming, and silver is, as I said, I've been saying, is the fuse to the gold market. You couldn't have $100 silver and gold not go higher than where it is now. Yeah, and the real danger is that gold is the antithesis, if you will, to fiat money. It's the anti-dollar. It's real, and the fiats are printed by man. They're not real. They don't have any real value other than the fact that governments mandate that you use their currencies. So you really couldn't have, say, $5 or $10 or $25,000 gold and the fiat system remain as it is. If you had $5, $10, $25,000 gold, you would have interest rates going much, much higher because confidence would be breaking in the sovereign debt that not only does the world run on, but sovereign debt, particularly US Treasuries, are the foundation to the entire system. And that foundation is pure, it's a mirage, it's sand. If you go back to what happened during the Depression, you didn't have a system-wide failure because the money was still good. And the money theoretically was still good until 1971 when the U.S. went off the gold standard. Then from that point forward, it's been clown money. I think it's really important to keep in mind the difference in price. I mean, if you can buy silver and have it delivered in the West at $32 and you can turn around and sell it at $36. I mean, you know this very well because you do institutional business. I mean, if there's over a 10% arbitrage, that's going to drain the physical supplies pretty quickly. And I mean, it doesn't take a rocket scientist to figure out, which price is the real price. Is it really 32 or is it really 36? Well, if somebody's willing to pay 36 for it, that's the real price.
Silver has long held a unique position in the realm of currency. Due to its lower value by weight compared to gold, silver has historically served as a medium for everyday transactions. While gold has traditionally been favored for wealth preservation, silver's affordability and divisibility have made it more suitable for daily commerce. Silver has witnessed a surge in demand in recent years that has outpaced available supply. Silver demand exceeded supply in 2023 for the third consecutive year, despite a 7% drop in total demand to 1.2 billion ounces from the previous year's record high. Simultaneously, mine output declined by 1% to 843.5 million ounces, resulting in a notable structural deficit of 184.3 million ounces. BillHolter highlights the alignment between the global movement towards real money and the significant milestones achieved by precious metals. The breakout of gold, silver, and mining shares has been synchronous with this trend. Gold's attainment of new highs and silver's recent surpassing of the $30 mark are significant events. Let's get back to the interview.
The timing of the real money movement that you're seeing in the various states, it's coinciding with gold, silver, the mining shares breaking out to the upside. I mean, gold's at new highs, silver broke above $30. And I did put an article out a couple weeks ago suggesting that this was going to happen. Silver over $30, you saw it get hit, soften and correct a little bit last week, corrected down to what, 30, 20, 25, thereabouts. And then yesterday it was up $1.50 when COMEX was closed, but yet the rest of the world traded. So people woke up yesterday morning to a giant margin call. And that margin call on top of the week before COMEX raised margins in silver. So it was a double whammy for the shorts. And it looks to me like the shorts are going to be taken out. The physical markets have taken over. You can see, $40, $50 premium in Shanghai over both COMEX and London, and a $3 to almost $4 premium in silver. That's over 10%. That is creating arbitrage. And I think the last time I was on and spoke with you, we talked about arbitrage. And that's what's happening is that the physical inventories in the West are being drained. And I mean, at this point, it's like a heavyweight boxer fighting a lightweight, and the lightweight is paper and the heavyweight is physical. And, physical is moving the market. And then, let's see what the paper shorts can do. They come in, they try to hit it, and they get taken right back up. So it's certainly a losing battle now for the paper shorts, because the more and more they sell, the longs know that they can't lose. The longs know that they control the physical markets, are starting to control the pricing mechanism. So there's no fear in the physical markets that, oh my God, they're going to come in and smash it down again. The smashes have gotten shorter and shorter, shallower and more shallow, and we're going to get to the point where, and I've talked about this for at least 10 years, there is going to be a failure to deliver, and that will be a sight to behold. When that failure to deliver happens, the entire financial system will come down. You'll be looking at, God knows, you could be looking at four-figure silver very quickly. And I always caution, be careful what you wish for, because when the financial markets come down, your way of life will completely change, and it'll go from living the good life to purely survival.
In light of the recent milestones in the precious metals market, particularly the resurgence of silver and its potential to outshine gold in the coming months, what are your thoughts on the broader implications for investors and the global economy? Share your perspective in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.